What is going on, traders? Welcome back to the Traveling Trader. Good to see you guys again. In this video, I will be giving you a NEO update. Everybody's asking me my opinion on what happens now after NEO Day, especially since our last video on how to trade NEO before NEO Day was extremely successful. I'll go over my price targets from that video, show you where NEO is at today, whether it hit them or not, and then give you some more trade ideas towards the end of this video. So you definitely want to stick around to find out how to trade NEO now that NEO Day is over, or at least how I'm looking to trade it. And as you know, I'll be giving you some really well thought out and complex options trades as well, because we don't half-ass things here. And through options, you can literally generate any type of trade you like: a bullish trade, a bearish trade, a neutral trade.
You can barbecue it, boil it, broil it, bake it, saute it.
It goes well beyond just trying to buy the stock. Nothing wrong with that. As a matter of fact, I think NEO is a definite hold now that we've reached this point. It was a hold before, but it's definitely a hold now, and I'll talk about that as well. But before I get into it, leave it a big fat thumbs up just like this. If you get anything out of this video, leave it in the comment section below. Let me know if you are already in NEO or if you're looking to establish a position after NEO Day, what your cost basis was. I'm always interested to hear about your guys' positions and opinions. And if you want access to our wonderful trading group, link is in the description below, where I send out all of my trades. We have a community of over 2,000 members. You definitely want to join and be a part of it if you want an active, robust group where everybody's talking about trades, entries, exits, how to trade options. There's a beginner section. It's really jam-packed. And if you want to learn how to trade options, there is a link in the first comment below to my upcoming options course. Sign up and put yourself on the early bird list. That way you're notified first and you get a pretty lucrative discount on the course when it does come out. All right, let's get into it. So first we will be discussing what actually came out on NEO Day. I'm sure you guys have seen a ton of videos by now on YouTube, but I'll give you my perspective. So we'll talk about what came out on NEO Day, and then I'll be going over a price and chart analysis as well as a little bit of fundamental analysis, and then give you the trades at the end. Everything will be timestamped in the chapters below. So what happened on NEO Day? Well, really the two main drivers of NEO Day were the sedan and the battery technology. And as we always say with these binary events, if something comes out that is not known yet, that is what could drive the price significantly higher. If all of the information that is released is already known information, it is likely priced in. So in my view, there were very few surprises in NEO Day. However, what they did announce was actually very encouraging. So I'm not belittling it at all. I'm not saying it was a dud. It was not a dud at all. It was actually a success from my point of view. It's just that most of the information was known. Now, here's what I really wanted. If you guys saw from my last video, what I really wanted to look at was the price of the sedans and whether they can price it similar to a Model S, which is what they're looking to compete with, right? This isn't a Model 3 competitor. So NEO launched the SUVs first, and then now they're moving with the sedans. And I'm sure that once they're able to scale and they continue to grow, later down the line, we will see some form of budget model. So right now they're releasing what is to be seen as a Model S competitor, and they priced it at around $69,000, which I don't know if it was a joke because of the number 69, but either way, it is similarly priced to the Model S. So this is actually good news. This is a little bit of good news. This alone, I don't know if it will drive the stock price significantly higher, but we could see a boost or at least a neutral position established on the stock price, right? Because of this. So I do think this is good news that they were able to come in near where the Model S is priced. I think the base Model S price, right? Of course it is $69,420. I think that's the Model S base price. So it is obviously right there with the Model S base price. Now, deliveries of the ET7 sedan will begin in the first quarter of 2022. I don't think that's a big surprise either. And in terms of range, the ET7 will eventually claim a driving range of 621 miles, but that is with the new battery technology that will be coming in late to 2022. So it's not going to ship with that type of range. I think the initial range, as we see here, you're going to have different choices. The 70 kilowatt battery is the base model. That's 311 miles. The 100 kilowatt battery does 435 miles. Again, in line with what is currently established in the industry for high-end EV sedans. The 150 kilowatt battery, which is the one that will get over 600 mile range, will be available in the future, like I said, in 2022. Now, here's a bit of information that was not priced in. NEO is going to be working with NVIDIA. It's going to be using NVIDIA processing chips to help power their new autonomous driving system. And this partnership, I think it was it was kind of rumored, but definitely was not confirmed. However, it was confirmed on stage at Neo Day. Now, this is obviously great for those of us who bought Nvidia on the dip and continue to hold Nvidia. This is our group's biggest semiconductor holding after offloading Intel and AMD for major profits, shifting to Nvidia because of this type of future. So I think this will actually drive Nvidia's stock price higher this week as well, which is great news for us. But this is also very important for Neo because this partnership gives credibility to the brand. A company in its startup stage or in its infancy needs all of the credibility possible because these types of credible headlines, although you may think they're frivolous, they are not. If you've been around the corporate world, credibility is what drives most investors to continue investing in a company. If you think about a sales pitch or a business pitch, all the pitch really consists of is providing credibility and hope. Why is this product or this company worth investing in? And a partnership with a company like Nvidia gives Neo more credibility to move forward. Now, I think Neo is personally at a point of no return. What I mean by this is there was a time when Neo was a struggling startup. However, with investors and the Chinese government itself coming in to save the day, Neo was able to get over the scaling hump and continue to produce more cars. And this is what its deliveries look like for 2020. Started in January 2020 with barely 1,600 cars delivered. By September 2020, they had 26,000 cars delivered. So the trajectory is there. There's no way, in my view, that a company like this fails. I've been around the markets for a long time. Now, obviously, I could be very wrong, but there is an inflection point that once a company passes, a startup company passes, there's no way that investors will let it fail. It's already too valuable because it passed right above that inflection point. And now it's a matter of figuring out how to generate profit in the future. Tesla was not profitable until its 10th year. Amazon, I think it also took 10 years to be profitable. Obviously, I'm not comparing Neo to Tesla or Amazon. I'm just saying that companies in their infancy, once the potential's reached and they start rolling out products that the market can't do without, investors will not let that company die. They will keep pumping money into that company until it eventually scales and learns how to turn a profit. And in this case, Neo also has the backing of the Chinese government. Now, Neo also delivered updates on its autonomous driving, which we expected, as well as its future battery, which we also expected, but they did say that those batteries will be solid state, similar to what QuantumScape is doing. Now, there was some concern, I guess, amongst other YouTubers and maybe some news outlets about the battery and the fact that Neo doesn't actually own its battery supply chain, that it relies on outside battery suppliers like contemporary Amperex technology company. In my view, I don't see this as an issue. Yes, scale will always be an issue for companies in their infancy, right? You cannot expect a company to be vertically integrated right out of the gate. And by vertically integrated, I mean developing every single one of its components in-house. The largest companies in the world don't do that, including Apple. Apple still gets glass from Samsung. It took Apple 4 decades to produce its own silicon. Tesla still relies on outside battery technology. So this is, for me, this is just a sign of early growing pains. Yes, it is a problem that they will have to address, but with enough money and incentive, in my view, they will address it. Those that are criticizing this lack of vertical integration as somehow the company being less valuable, the company has to do that in its infancy. It hasn't even generated a profit. There's no way that they can tackle every single component at once. That's just ridiculous. That's not how business works. Of course, everybody's entitled to their own opinion and analysis. So if someone out there is analyzing this as a sort of negative on the company, that somehow the company is now worth less because it's not producing its own batteries right out of the gate, fine. That's your analysis. You're free to it. In my view, that's a little ridiculous. I've been around the markets a long time. Companies do not get vertically integrated right out of the gate. And even successful companies like Apple or Amazon still rely on outside suppliers. A lot of times they even buy out companies in order to inherit their technology. So I think really the few unknowns were the price of the sedans, which we know are now in line with what you would expect a Model S to cost. The fact that they are looking to go solid state for their future batteries or future long-range batteries, which also gives credibility to QuantumScape, and QuantumScape might even see a price boost in the coming weeks because of it as a sympathy play. And we know they are partnering now with Nvidia. I think those are the 3 biggest unknowns. Aside from that, everything was pretty much known. So now let us talk price. All right, so let us look at Neo's chart. If you remember from last video, I said I expect a run up to Neo Day to around $59. It closed on Friday at $58.92. So it hit our target exactly, and our trades panned out perfectly for this event. Let's take a look at a brief snippet of that previous video. NEO. Going from where it's at currently, and we'll talk about price in a second, from $48 to $59, that is a very realistic price target. I mean, we were already at almost $58 just back in November. All right, so yeah, so we gave it a $59 price target by Friday. It hit $58.92. Like I said, our swing trades and our options trades panned out perfectly because that is exactly what we expected. As I told you last time on the price, it was forming this pennant up here leading up to the week of NEO Day, right? It was forming this pennant and I expected it to break out of this pennant and it did. All right, so in terms of new price targets, I am sticking with my $100 2021 price target, but in the shorter term, I do expect NEO to make higher highs, and that is because it broke out of resistance now. It is sitting above the all-time high at the moment with this healthy green candle here. So because NEO Day wasn't really, there wasn't anything in my view, or there wasn't much, I guess, in my view that was unknown. Most of it was known. Again, that's not to say it wasn't positive. I think it was extremely positive that some of the things we were suspecting were confirmed, but I don't think there was a ton that was unknown. So I do expect a gradual price rally from here. I think NEO will start establishing a new high soon and a new price range. In terms of what, I mean, obviously that's kind of like telling the future, but you can estimate the stuff using some mathematical modeling like the Fibonacci. And if we use the Fibonacci extension, we can project future prices based on the Fibonacci number sequence. So if you see the 1.272, which is a Fibonacci extension, if you don't know what this is, it's fine. I mean, you don't need to get intimidated. Basically, it's a number sequence that tries to project the next natural number from the current all-time high. So it's looking around $70, $71, which to me is realistic as the next target for NEO, especially considering that NEO Day, again, was positive, but not extremely groundbreaking. So we could see, you know, a general run up to $70, $71 in the next few months here. I'm not saying it's going to shoot straight up. It could bounce around until then. We could even see a retracement until then. But in the next few months, I think it will establish a new normal at around $70. I do know that large institutional investors have been buying NEO going all the way back to November. Some of the largest purchases were made. Bailey Gifford and Company. This is a company that actually has a great track record. This institutional fund here has a great track record. You can look it up. But in 2020, it already produced a return of 120%. Not many funds can say that. I actually wonder what ARK's return in 2020 is. They might have them beat. I think it was, yeah. So ARK's, it says their 1 year daily total return is 177%. So Bailey Gifford is definitely up there. So they are currently the largest shareholder of NEO in terms of institutional investors. They have $2.3 billion worth of NEO. BlackRock is the next one down at around $1.1 billion of NEO. Vanguard Group has almost $722 million of NEO. So And if you look at all these purchases or these filing dates, this is recent history. We're talking about November, October, some even in December of 2020. And as I always say, follow the money, right? So they know what's gearing up for the future.
I'll keep you in the right direction if I can, but that's all. Just follow the money.
All right, so in terms of how to trade this, we'll do stocks first and then options. Well, in my view, if you wanted to own NEO already, and you didn't buy here at these retracements to the 50-day moving average, then you need to rethink your trading strategy and or get a basic understanding of charts. You don't need to be a chart master. You can get a free trading view account and you could just add the major moving averages, the 50-day simple moving average, the 100-day simple moving average, the 200-day simple moving average. That's what I have in the chart, and the 21 exponential moving average. You can find beginner videos on all this stuff. But if there's a stock you want to own, you want to buy these things at a discount, man. You don't want to buy these things when everybody is talking about it. I say this all the time. Tesla was sitting, this might be infuriating to some of you because right now Tesla's $880. Tesla it was not that long ago, for a month, it was sitting near the 50-day moving average. Tesla was $411 not even 2 months ago, and it was sitting in this range for an entire month, and nobody wanted to buy it, right? They want to buy it now that it's $880. I say this all the time. The stock market is the only sale in town where nobody shows up or nobody lines up. If you wanted to get a PS5 or an Xbox or Lamborghini or a limited Louis Vuitton Supreme collaboration drop, you would line up for that, right? But no one lines up when Tesla's just lowly sitting here at the 50-day moving average doing nothing. This is when you want to buy if there is a stock that you want to own. So if NIO was a stock that you wanted to own, that's when you should have bought. It hit support so many times in the last month. Anyway, obviously can't cry over spilled milk if you're not in NIO already. From here, I would just dollar cost average if you want to own it. I do not think there is a swing trade from here from a stock perspective. From an options perspective is completely different. We'll talk about options in a second. From a stock perspective, this is not a swing trading position here. This is just, if you wanted to long-term hold NIO, you would dollar cost average here, meaning you buy here, you wait a couple weeks, you buy some more, you wait a couple weeks, you buy some more, regardless of what the price is, right? You develop a schedule for these stocks that you want to own, and you inch into them until your average price is at a decent level, regardless of whether the stock price went up or went down. Again, you would only do this for stocks you want to own for the long term. If you don't want to own NIO for the long term, don't do it for NIO. But in my position, there isn't a swing trading position from here, meaning a short term where you buy and then you make multiples more in a week. You can't always create a position out of thin air if you missed the boat. So the next time there's a stock that you want that retraced heavily, like NIO took what, a 30-40% discount? Yeah, it was down 32%. Right? If that's not enough of a discount for you, then again, need to rethink your trading strategy and or familiarize yourself with the basics of reading a chart. So the next time you can know that that price represents a major discount. All right, in terms of options, we had an amazing butterfly spread that we closed for 60% profit on Friday. And I closed that before NIO Day because obviously NIO Day is a binary event. And if we're up 60%, I want to take those profits in case NIO Day is a dud. I already have them in my hand, right? We probably could have made more if we held on to it. Who knows? But 60%, I'm happy with it because I already have a large stock position on NIO from buying the dip anyway. Now, we did establish this new position where we sold covered calls against our shares. So what is a covered call? In summary, I'm not going to go over it in pure detail, but in summary, it's if you own at least 100 shares of the stock, you would sell calls above where you bought it. You collect that premium for selling the calls, meaning, you sold the calls, you take that money and you collect it. And if NIO never hits that stock price, you keep that entire amount. So it's really good for stocks that you bought that might have hit a wall in the short term and you want to make money off of that stagnation. So we sold the $70 call for $730. Now, if NIO never hits $70, then we keep that entire amount, $730 per contract. If NIO hits $70, then you'll be forced to sell your shares at 70. But if you bought those shares at 40, then you make $30 per share. Not only that, you get to keep $730 too. So essentially you're making $37.30 per share on NIO. The only time you lose is if NIO tanks and it tanks below where you initially bought it from. In this case, I'm not expecting that. So this is a pretty safe bet to generate an insane amount of cash. And these are the types of strategies that you want to start thinking about as opposed to just buying calls and praying that they go up. There's so many sophisticated strategies that you could do. Again, I'm doing a full options course that will describe every single strategy that I've ever known, including the covered call. Now let's take a look at another strategy that I talked about in that video. Well, in this case, you would only do this if you wanted to own NIO shares, but you could sell, for instance, a $45 put that expires March 19th for $730. If NIO doesn't hit $45 by March 19th, like if it doesn't retrace back down to 45, you get to keep this entire amount. So I was saying that you could sell the $45 put for $730. If we look at the $45 put now, it is $3.80. So if you watch that video, you would have sold the put for $7.30, and it is now worth $3.80. Essentially $3.50 per contract you sold, or $350 per contract that you sold. Now you could just let it expire and keep that entire $730 if NIO never hits 45. Or you could close it out if you like your profits. Okay, what else can we do? Two things. If we see a drop in NIO, then I'm going to be buying a leap call. I did a whole video on leaps, but they're basically long-term call options. So if NEO eventually drops and we get to a support level, like at the 50-day moving average, then I will definitely be buying a leap on NEO, probably expiring sometime in 2022. Right now, you could buy 2022 calls. Obviously, these prices aren't going to be reflective of what happens if NEO drops. These prices will be way cheaper because when the price of the stock drops, the price of calls drop as well. So I will likely buy a call with a 0.8 delta or above, maybe at the $40 level or maybe the $35 level, depending on where NEO drops to. If it drops, I'm not saying it's going to. This is an if scenario. And I'll be buying that leap to make sure that I take advantage of NEO's run up. Now, if we see NEO gradually rise, which is what I expect it to, if it does hit that $65 to $70 range, then I will likely sell a call spread on NEO. Now, selling a call or a call spread is technically a bearish position, but I'm not bearish. It's just establishing a ceiling based on a run up of the stock and the improbability that in the short term it will continue further up. So you could essentially go out to like March, and obviously, again, these prices aren't going to be reflective of what is going to happen if NEO does see an increase to $65 or $70. But you can essentially sell the $70 call and buy the $75 call, and you're creating what's called a credit call vertical spread or a bear call spread. And you can essentially sell this right now. You could sell it for 112. These will obviously, you will get obviously a lot more money if NEO does see a rally, because the price of calls go up when the stock price goes up. So you can sell that call spread for a lot more money in the future if that happens. And that's exactly what I'll do, because this is called a defined risk strategy. With vertical spreads, the max that you can lose is the difference between the strike prices minus what you got paid for the spread. In this case, this is a $5 spread. If we got paid, let's just say $2.50 for the spread, we can't lose more than $2.50. So it's a defined risk, very easy strategy, and one that can only really be deployed using options. You can't do this if all you know how to do is buy and sell the stock. So in my view, very lucrative to learn options. It will expand your trading level to unimaginable levels, in my view, right? It just opens the door to a wide array of opportunities. Anyway, that is it for this video. If you get anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know how you traded NEO or planning on trading NEO. Sign up if you want access to the trade alerts. And if you want to be on the early bird list for the options course, it's the first link in the comments. I always get this question, where is it? It's literally the first comment, not the description. Look at the comment. The first comment, you will see an early bird options course sign up form. You'll definitely want to be on that if you want a lucrative discount on the course and you want to be notified first. Subscribe to the channel. Stay safe out there, traders. Peace.